this is Abhijit Chatterjee recording our weekly session of Chartsarefun. This is for the week of December 1st, recording this on Sunday, December 7th in the morning. Today we will talk about the market in terms of what we think it could do with the FOMC decision next week. So we have FOMC meeting on December 10th announcing their rate decision. Market almost 86% probability on the FedWatch tool expects a 25 basis point cut. We think the cut is quite likely, unlikely that the Fed would disappoint the market, but then we might have a bit of a hawkish stance because we know that there's a divided Fed. There are folks in the Fed who think otherwise, looking at how far the market has come, how far strong the economy has been, with GDP holding around 3%. But then there are doves who are concerned about cracks in terms of recession ahead. Employment in particular has been weakening. In particular, the ADP report that just was printed the past week came at 32,000 loss of jobs. So we think that market will react initially maybe negatively, having come up. It's short-term overbought. We'll explain why it's short-term overbought. Maybe react negatively, have a bit of a pullback, but not a deep pullback, a shallow pullback, almost like a right shoulder to an inverse head and shoulder, and then a breakout. There are many out there talking about a melt up. So we will talk about what are the potential targets on S&P, on the IWM, the small cap, which we think has got decent upside ahead. And then in the Nasdaq, what the upside's there. And then we will kind of show it some of the technical indicators of the Nasdaq that kind of tell us why this rally that we get could then lead to a sell-off, a deeper sell-off. We'll explain that with some technical indicators in the Nasdaq market. And then talk about a Barron's article. There has been speculation. There has been way too many IPOs that are 15 million piece or less that Nasdaq used to previously allow 5 million as the cap for IPOs, but now they've raised it to 15 since August. But even with that, there's been quite a few of these IPOs that then regulators had to crack down on. And we'll show you a couple of charts of these IPOs, one out of Hong Kong, based on kind of a, restaurant company, and then a hot pot kind of a restaurant company, and then one with kind of an alternative medicine. They expect to kind of go at treating, worms with wounds in terms of, especially if you look at wounds that are kind of, chronic wounds, treating that. So a couple of those companies, very negligible kind of volume every day that they trade on, but very speculative, and how we look at some of their charts. And then we'll end with Bitcoin. We know that the entire market has kind of taken a warning with the Bitcoin pullback. Bitcoin topped out in October. And we look at, what the monthly chart is telling us, which you think is telling us there's a reversal with maybe another 5 to 10% move upside in the next few weeks as the market melts up higher. And we'll see what the target is. And then perhaps Bitcoin and the rest of the market pull back sharply in the month of January. So without further ado, this is our blog site, chartsarefun.substack.com. And there's an interesting blog that we just published on Saturday. Look at this. The listed ETFs in the US exchanges has shot up. We know that there's been ETFs coming from the cryptos. There's been ETFs that are leveraged. In particular, there are many now ETFs that are actually come out with 5x leverage, unheard of, but that's what happens kind of late stage of a bull run. So from 2023, we can see this sharp vertical climb in terms of the number of ETFs that have launched. So that's in some signs a sign of a bubble or sign of a market that's getting closer towards the top. And then, we'll talk about the Barron's article as well about IPOs. So this is again, our blog site. Our YouTube site is Charts Are Fun as well. Please do subscribe to the channel. And if you like the videos, appreciate you hitting the like button. And then let's just go straight into what we are seeing across in YouTube, and just many people out in CNBC and elsewhere are talking about a blow off top, a melt up market. So in fact, if you look at Mr. Tuteja from Goldman Sachs. He's one of the CIOs of their global equity strategist. He talks about that a month ago when he was interviewed. He talked about kind of Fed, kind of with the dovish rate cuts, kind of stoking upward move in the market. So a blow off top from his perspective. You can see articles about a silver blow off top and so on. So where do we think if we do get a blow off top, how high can it be? Can it really be several thousand points from here on the S&P 500? So let's look at the daily chart of S&P 500 and what we think could be happening. Again, market is very difficult to predict. The best that we can do is look at the tea leaves of the market, look at the price stories of what the charts are telling us, and from there make some form of educated guess. So here we can see that potentially an inverse head and shoulders forming on S&P 500. The neckline is right around 6,900, 68.70 to 68.90. The left shoulder is from that level to 66.31, up back to 68.69. The head down at 65.21. From there up to a peak that we saw on Friday at 68.95, and then a right shoulder pullback. We think this pullback comes next week. Primarily, we do get the cut, but then maybe a bit of a hawkish as Powell has been. Even in the previous meeting, he talks about the divided Fed. He talks about there'll be data dependent and there's no guarantees about further rate cuts, and that market may not like. So we may get that pullback, and then jobs data comes out. The November jobs data, non-farm payroll data comes out on December 16th, which is the following Tuesday. There's a possibility that that could be weak. Maybe the unemployment creeps higher from 4.4 to 4.5. And then the market becomes even more certain that there are going to be more cuts coming. And further rate cuts would perhaps trigger this mega rally. And maybe you might even hear from the Fed governors out there that they will kind of endorse more cuts. And we know that there's also an appointment of the next Fed chair that Kevin Hassett, that President Trump has indicated to come out in early January, and he's going to be super dovish. He's President Trump's pick, and he's going to be extremely dovish towards additional cuts. And maybe that kind of together leads to that melt up kind of rally. But if this inverse head and shoulder pans out, we think that we can see that there's already a pattern of lower highs in RSI. That in some ways is a topping indicator. So that inverse head and shoulder, a 65.21 to a 68.95, you're talking about $374 or 374 points. At 374 to 68.95, you're talking about roughly, 7,200, 69, 7,270, something around that. So 72.65 to 72.70 is where we think that melt up target could be. We don't expect it to be 8,500. There are those that are talking about that kind of melt up target, but we think that potentially a pullback down towards the 6650 or so, and from there a straight up climb of about 600 points, little less than 10%, 9% climb from there is what we think could happen by the early January timeframe. So that's where, so the Santa Claus rally very much taking into effect into the end of the year, into early part of January, getting us the target fairly quickly. Let's look at small caps. That we think also has an inverse head and shoulder forming. The neckline here is exactly at 252, 252.77. From there, it pulled back to 240.76, 250 Then the head formed at 28.90, back up. And then from there, we can see that the right shoulder is what we expect will be forming in the next week or so. And then that pullback towards the 240 level, which could act as support, and then that breakout higher. So that measured target from 228 to a 252, we're talking about $24. At 24 to 252, that takes us to 276. So that's where we think the melt up target on the small cap Russell 2000 is, which is not bad. From a 240 to a 276, you're talking about $36 from a 240, and that's roughly almost 15%. So that's where we think the small cap is. So percentage wise, 9% on the S&P 500, 15%. And also, if you look at the past earlier part of the year, there's a beautiful cup and handle at a 228.90 is the left rim. the base of the cup, the low of the cup is 170.77 up to 226. So 170 to a, say, 171 to a 226, we're talking about roughly $51. So $51 added to 226 takes us to let's see, it's 50, not $51. 171 to 226, you're talking about $55. So $55 added to 226 is 281. So that cup and handle is slightly higher than the inverse head and shoulder. So anyway, from a 276 to 281 is where we think we can get the small cap move higher. So it's at least from the 240 pullback, at least a 15 to 18% kind of a move is what we think we might get. The Nasdaq, not the Nasdaq 100, but the entire Nasdaq index, the COMPQ, Nasdaq Composite, that also has a cup and handle that we can see in the earlier part of the year, 20,100 to 14,800 to 19,800, then a handle. So 14,800 to 19,800 is 5,000 points. Add 5,000 to 19,800 is 24,800. So this, on the shorter term, is also beautiful inverse head and shoulder where the right shoulder dip is about to come. So from 21,900 to the peak that we saw closer to 23,680, just rounded up to 20,700. So 21,900 to 23,700, we're talking about roughly 1,800 points. Add 1,800 to that breakout point of 23,700, you're talking about 25,500. So that's potentially where we think that upside target on NASDAQ is. Before that, we get a right shoulder pullback next week into the 22,600 is where we think that comes on the NASDAQ index. I said we're going to talk about some technical indicators, why we think that expected upside in the market is very much possible. So let's look at a summation index, which kind of gives you more of intermediate cycle highs and lows. We just came out of a deeply oversold level on that NASDAQ summation, McClellan summation index. And then from there it's climbing, and we can notice this, what had happened in that January into the February timeframe is where we think a similar kind of a move is going to pan out. This RSI, usually when it starts climbing, goes up to 70 and maybe even sometimes stronger before it comes back down. So here we think it's going to go do what it did in late January into February. It's going to keep climbing, not till the point that it'll take out 125. We think this is a pattern of lower highs, but it might be climbing towards maybe the 0 or slightly positive 50 or so level in the next couple of weeks into the end of the year. And that's what will continue the bullish momentum in the market to climb higher. That, however, is going to be led with some zigzag movements in terms of the broader oscillator, which is a short-term cycle indicator of the market overbought, oversold levels. That oscillator has already peaked at 49 like we saw back in mid-January. It peaked and then we formed a set of lower highs till the point that we got the pullback into the lower highs and then also lower lows to the point that you got a minus from a plus 41 to minus 77 by the time the market sold off into the April low. We expect a similar kind of a move. The oscillator could have already peaked, so there could be market breadth deteriorating. We can see that the MACD has begun to curve lower. We can see that the 10-period moving average on that oscillator is about to hit an overbought level, like what we saw back in the late January into early February. From there, it declined. We expect that to decline. And we expect that the oscillator would indicate that this move higher will happen fast and it will happen with deteriorating breadth is what we think will happen. Not everything in the NASDAQ will move higher because that's how the oscillator zigzag lower from January into February. And then if you look at the bullish percent, which is also setting lower highs, it's also forming a dome shape. This is percent of NASDAQ stocks that have bullish point and figure charts. So it has as low as 20% of the NASDAQ index had bullish charts in April low. From there, the maxed out at 62. And then we can see it has been forming a series of lower highs, 62, 61.9, 58.87, and recently it was at 55.2. So as we get the pullback next week, expect this bullish percent to come down and then maybe form a series of lower highs till the point where it tanks like we got into March into April. We think exactly like this waterfall decline we got from late February into April is what's coming up from January into March. That kind of a pullback, be ready for it. and that's where we think the BP comp or the BP of the Nasdaq will come back towards the 20 level again. And we can see that the 50 period moving average shown in blue is beginning to converge and go lower below the 200 period moving average, like we saw here into January into once it crossed bearishly, it kept falling till the point where it kind of moved higher after bottoming out in that April to May timeframe. So that is telling us that the market is deteriorating in its breadth. This is the bullish breadth, and we can see lower highs printing in that. Indicates that's a very good possibility of after that melt up, we get a decent sell off. And that is what we are very much expecting looking at these indicators. And finally, the Nasdaq high low, that's also printing a dome shaped pattern of lower highs. It started off at a single digit level of 6% of the Nasdaq in terms of if you take the high minus low index. So this is what that came down to 6, went up to 84. And basically these are new highs and new lows, right? And you subtract and you see net, there was very few new highs coming, way more lows is why this fell to high minus lows fell to 6. This is normalized by the way, so it goes from 0 to kind of 100. So this then has gone to 84%. From there, it's coming back down at a lower high. And then from here, we think it could start climbing lower. And we can see that the 50 period on this is also getting close to have a bearish cross, indicating lower values are coming on this, like what we saw in the late February through April timeframe. So we expect, in summary, a repeat of the sell-off that we got from February. Maybe there might be something for the administration. Maybe the market may not like Hassett's appointment. It could be maybe the economic data could be that weak that market will get concerned about a recession, and that overall could then cause to this sharp decline. We don't fully know what the economic reasons are, but there could be something in the next couple of months that could cause the market to be fearful, and with the fear, sharp sell-off is expected. Now, talked about the Nasdaq's listed IPOs that Barron's had put an article, this last release. Since 2023, 230 IPOs below 15 million apiece. Used to be 5 million, their minimum threshold for having IPOs. That has now been increased to 15. But even with that, out of the 230 offerings, only look at what the New York Stock Exchange did. They've been a lot more conservative. New York Stock Exchange only did 33, was as a factor of over 7x in Nasdaq at 230. However, many of them have gone up in flames. Regulators are cracking down. So let's look at one of them. This is Master Beef Group, a company in Hong Kong, basically runs 10 or 12 of these hot pot kind of beef hot pot kind of restaurants. Nasdaq had put in a requirement for profitability to be listed in their exchange. Well, this company went and sold a few of their restaurants, rather 12, maybe sold 5 of them, showed a net gain from the selling, and showed a 4 million kind of profitability for the 2024, and as a result qualified for the listing. You can see a parabolic climb from $2 all the way up to 16, and then look at the sharp waterfall decline to 3.5. From there, significantly climb back higher to 13, and now we can see that pullback. Look at the number of shares that traded, 587. So this is like crazy. Very few people even traded, but we shall see what happens with that melt up. Will it get a bid again? That's what we're going to watch. This was like a one-time volume surge, but when meme stock kind of trading happens, strange things happen. So if we do get, we're going to watch this carefully, but if we do get a melt up, we're going to see if this time this one gets a bid above 13, because from 3 to 13, talking about 3.5 to 13, talking about a $9.50 move, $9.50 added to 13 will take it to new highs. It's going to take it towards 22.5. So that's what we're going to watch. We're going to see if a meme kind of mania picks up on this stock. And then the other one that's worse looking is back to penny level. It's at 63, 64 cents from a kind of a climb to $9.40. This is a CUPRA holdings that basically believes in a therapy for for wound healing. They use worms to kind of maggots, kind of worms to heal wounds, they claim that they will get an FDA approval, but scary. I mean, look at the drop from $9.47 down to 85 cents, and has been hovering, scraping out in the bottom. So that's a concern that market in many ways has got a speculative excess. If these kinds of IPOs could have gone through, market kind of is kind of showing toppish signs like we have in the SPACs that we saw in 2021. We're going to end with cryptos. We talked about Bitcoin in particular. We know that what happened in Bitcoin was a sharp drop, and we know that the sharp drop came after three successive tests of 123,000, 124,000, and then 126,000. Higher highs, 23, 24, 26. But then once it broke the 103 level, so 103 to 126, you're talking about 13,000 roughly. 13, say 12,700. Subtract 12,700 from 133,600, you get 80,900. Where was the low? Not too far from there, 80,600, within $300 lower than that target. But from there, as it formed a spike kind of recovery, forming higher lows at the ascending triangle kind of a pattern at 94,200. If you measure the gap difference from 80,600 to 94,200, you're talking about roughly 13,600 is what that depth of that ascending triangle is. At that 13,600 to 94,200, you get 107,800. Where is the 200 period moving average? 109,000. Where is past a level that it has tested from before it dropped? 107,500. So that's not unlikely. There's a very good chance. And let's look at the monthly chart. We see more of a repeat of what happened when in the 2021 into the 2022 collapse. Look at three sharp candle drops, then a reversal candle with a long wick, and then two successive months of upside, and then the next drop came. We expect a similar pattern to repeat because look at when that happened. MACD had crossed below the center line, right? Histogram went below the center line. The MACD crossover happened, and then it took several months for the bottom to pan out. In a similar way, we think that we could be repeating that. MACD has already had its bearish cross. The histogram is below the center line, it's gone negative. And as the MACD falls, expect maybe 2 months of upside, like we saw exactly into early 2022. And then the drop. The drop could take us down all the way so we can see a test of this level. The rising, in this case, the 50-month moving average is at 56,000. If it's a repeat, bulls would tell you, Tom Lee and others, that no, that's not the 4-year cycle is broken, it's dead, because the 4-year cycle said that every 4 years market peaks out and then we have a crypto winter for several months where you have 70 to 90% crash. So that's what happened in 2017 into 2018, 2021 into 2022. So bears are saying that the crash is going to come again. It's already started off early signs of the crash. We've already had a 30% down move from 124,000 to 80,000, right? You're talking about roughly 124 to 80 is talking about 44. So 44 out of 124 is more than 30%, right? So you've already had that. But the key is in the near term, we could see kind of a couple of months of upside and then that drop. And if you really measure the drop from 124 to 80,600, that's 44, subtract from 80, that measures to 36,000. That's way lower than even the 50 period moving average at 56,000. Somewhere down towards 36 is somewhere down previous levels here at 33. 36 would be somewhere around here. So that would be a sharp drop. 124 to 36, that would be a big ouch. You're talking about almost 88,000 or so from 124. So that would be like 124 to an 88,000. You're talking about roughly more than 70%, right? Well, no, not more than 60% is what that could the 70%. No, 70% of 124 is roughly 84, $85 of drop. So if you get a drop up to 36 to 124, you're talking about 88. So yeah, it's almost 70, little more than 70% is what that drop could be. So that's what the bears are looking for. But we think that near term, we do see an ascending triangle possibility. A move up to 107 is very much in the cards. So to sum it up, we talked about a blow off top across the YouTube now. So be careful about that. We think that the blow off top is coming, but not like several percent climb from here. We think that the S&P's got maybe 9% upside a right shoulder pullback is imminent into maybe a little bit of a hawkish kind of a cut on Wednesday. And then from there, we move higher with weak economic data the following week. And that will just take us towards a target at 72.60 to 72.70 is where we think S&P could go. We think small cap IWM could go up to a level near 276 to 280. That's what that inverse head and shoulder is. So 228 to 252 is talking about 24 points. 24 to 252 is 276. So that's where we think IWM could head. Nasdaq here had a inverse head and shoulders potentially forming 21,900 to 23,700. So that's roughly, you're talking about 1,800 added to 23,700. You're talking about 25,500. That's where we think the Nasdaq index could go. And we think that the summation index with more upside, it's climbing. RSI will go towards 70 like it did towards January into mid-February. So we think a few weeks of upside is there in this melt up move and the summation index will climb. However, what we saw as early indicator of a market topping is when the oscillator starts printing lower highs, lower lows. We think a similar thing will have happened. Oscillator we think is already topped at 49 like we saw here in January at 41. And over the next few weeks, we will see this bottoming out and till the point where we get a sharp sell-off and then a bottoming out of the oscillator pulling to negative levels like we saw in early April is what we think is happening. Bullish percent index on the Nasdaq. This is not the Nasdaq 100, but the entire Nasdaq is a dome-shaped topping pattern. This is telling us market breadth is deteriorating with lower highs, lower lows, and we think eventually it heads down towards the 20% or lower is what we think is a repeat coming. So what happened in this waterfall decline from February through April in the bullish percent and with the markets, we think is coming up into January into February through March is what we think is going to repeat. And we can see that the 50 period is bearishly getting ready to cross below the 200 like we saw back in that February timeframe. So expect that to happen to take the market lower. In a similar way, the high low, the Nasdaq high low is also printing a dome-shaped topping, lower highs, and we think that should come down to single digits like we saw into April. So sharp drop is coming up in the next couple of months and expect that to also come down as the market gets lower. The Barron's article about IPOs in Nasdaq showing speculative interest with people trying to squeeze in, IPOs that are then being cracked down by the regulators. One particular one that Barron's talked about is Master Beef. It's shocking how they launched an IPO. They only have a few kind of hot pot restaurants in Hong Kong that they run. And look at the kind of waterfall decline from $16 to 3.5, shot up to 13. We are watching this from a speculative bubble to see will speculation with lower rates help this to climb back. If it does, then we would see it to top out anywhere from 20 to 23. Unless it's a very aggressive investor, look at only the number of shares that trade, 587. Very, very low liquidity. We wouldn't recommend anyone chasing this. But just to watch it for the fun of it, we wouldn't be surprised for this to break 13 and hit a 22.5 or so in this next bubble kind of melt up run coming up. This is even a worse chart with CUPRA holding somewhere out in Singapore in the Far East, kind of coming up with treatment for treating wounds and not the acute wounds, but these are more of the wounds that you kind of have over longer durations, like with the vascular kind of situations and so on. So that from a 9.5 crashed all the way to 80 cents right now, trading around the 65 or 63 cents or so. We don't think this will get a bid. This is very speculative and at the most may go up to a couple of bucks, but crazy of how these IPOs have panned out in the Nasdaq. And then Bitcoin, we think that has met its near-term target on the drop from 126 to 103, measured to 80,900. It fell below it to 80,600. From there, it's trying to form a bit of a ascending triangle kind of a base, higher lows and a horizontal resistance at 94,200. This measures to 107,900, just above the 107,500 that we saw in November before the sharp drop lower. So that's what we expect it to go back and test. And the monthly chart is also indicating a couple of reversal wicks, similar pattern of what we saw in late 21's drop, then into early 22, 2 months of climb, counter trend climb, and then the drop. So we think a counter trend climb is coming in Bitcoin. There are those that expect the melt up for it to take it to 150. Nothing can be ruled out. If you get a very, very aggressive cuts, liquidity is flushed in the market, maybe President Trump says something very bullish about cryptos. Anything is possible. We could take out this top and maybe go to 150 for a new high. But at this point, looking at what we've seen in repeat of 27, 2021, we seem to be repeating that same pattern. A top seems to have already have happened. We are basically going to have counter trend rally for 2 months, and then we see that the MACD is already bearishly crossed below like it did here, which means we could be headed down towards this destination, at least as the initial test of support, which is at 50 period moving average at 56,000. If you do a measurement from 124 to 80,000, we're talking $44,000. Subtract from 80, that's 36,000. That's kind of the level we wouldn't be surprised if Bitcoin drops down to. So be very careful holding Bitcoin into the long term. Near term could be a nice trading instrument, but be cautious on that. With that, good luck investing. We'll talk to you next week. Thank you.